So, dear friends, we are on the Pocket Option platform, and today in this video, I will be breaking down, showing, analyzing, and explaining everything all mixed together because I want to talk about how to make any trade profitable. Of course, the title of the video, as you understand, is very stormy, how to get all the deals in the plus. This is almost impossible to do, but I will now tell you something that will give you confidence in your transactions. Something that you will be able to use, and most likely, you will be able to make a profit from each transaction. I can't promise that every single trade will be profitable, but your confidence will definitely grow much more than if you were trading with the same strategies that other traders or so-called non-traders use, like those 5-second intervals and so on. All those strategies are basically just a gamble, to speak. So, let's jump right into the quick analysis. We have started a new week. Today is Monday, and therefore, exchange pairs are without OTC, that is, they are open. So, let's get right into the analysis. Everything I'm sharing with you right now is also covered in my previous videos, so I recommend checking them out because there's a lot of interesting stuff there, a lot of strategies that actually work. Many people have already told me that if you trade and learn, it really all works. So, let's get started. We'll begin with the euro-dollar pair, which is without OTC. I'll also be analyzing OTC pairs because there are people who don't like trading pairs since they can be a bit more challenging, so they stick to OTC. Let's get started. We're looking at the euro-dollar pair and we're going to switch to the 15-minute interval to do our analysis here. We've just started a new week, so we have these stripes here. Don't be alarmed, it's all normal. The currency pair opened right at 12 o'clock Moscow time, at the start of the new day. And what do we see here? We can see that we have a downward trend. So we have a very strong downward trend. And next, what we see here from the bottom is that the trend has broken down to the minimum, held it here, and the impulse has passed. Because of this, the trend is slowly starting to turn around. We noticed that, alright, we've done a little analysis so we understand how the trend was moving here and where it stopped. Next, we need to examine the candles, their movements and meanings. We're focusing on pullbacks and volumes. Volumes indicate when a candle forms with significant size. This is crucial for us. We checked the 15-minute interval, noting a minimum and a slow turnaround. Therefore, we also look at volumes because all this is very important to us. We looked at the 15-minute interval, saw that he had set the minimum here, and had already begun to slowly unfold here. You can also use Fibonacci, which I talked about in the previous video. By the way, it just came to mind because everything I'm sharing can really be applied to your trading. Now let's switch to the 5-minute interval and see what we have here with the candles. So what do we see here? We see we had a downward trend here, as seen the candles alternated, but gradually moved down. There was a correction, and from that correction it sharply broke out with an impulse down. At times it tried to recover. The price attempted to rise but failed. Thus, the trend stopped here, as noticed on the 15-minute interval. What can we do? Where is the trend going, and how can we ensure success? Our analysis shows a minimum is held, and an upward trend forms. In the coming hours we can trade upward as an impulse is seen. A reversal started, so we're catching upward trades. Now the price is correcting and uncertain. Strong bullish candles appeared, but now the price corrects and is unclear. We could take longer trades, like a 10-minute upward trade, and see how the trend develops. We're basing our analysis on the fact that we have a minimum held here and a gradual upward trend is forming. So, in the coming hours, we can try to make some trades for an upward movement because right now we see an upward impulse. We can see that a reversal has started, and because of that we're trying to catch some upward trades. So, right now what's happening is that the price is slowly correcting itself and can't quite figure out where to go. We can see that there were some strong bullish candles here, but now the price has started to correct and it's unclear where it's headed. So here we could take some longer trades, like I don't know, since this is a 5-minute interval, we could take a trade for 10 minutes for an upward movement and see how the trend develops here. Right at this moment, let it break out with one of the candles, for example. If we have a bullish candle that suddenly forms for an upward movement, we will base our actions on that on the 1-minute interval. So personally, I'm going to try to open a shorter trade, just on the 5-minute one. I'm going to open a trade for 5 minutes like this, and I'm entering the 1-minute interval now. What do we see here? We can see that it's more extensive here because we're looking at the 1-minute interval, 1-minute candles. Because of this we can see how the trend occasionally dipped down. In the previous moment when we had a downward position, it was pushing down and compensating, and then it fell again. And here it's all the same but in reverse. So this is how we're trading. And here it's all the same, but in reverse. That's why we negotiate here. If we have a correction like this, I recommend opening at a lower position during an upward trend to catch it. And then, for about 10 minutes, we can open a trade for an upward movement, and most likely we'll end up in the plus because we're in an upward trend. And then open a trade for about 10 minutes. Let's open a trade for about 10 minutes for an upward movement, and most likely we'll end up in the plus because we're in an upward trend. Secondly, the price usually dips down, tries to turn around, and then there's a price compensation. Because of this, the previous high is broken and a new one is created. Because of this, when the price starts to correct itself or goes down, try to open a trade for an upward movement, but not for a short term. Not on 5-second timers, not on 10, not on minute ones, not on 2-minute ones. Try to open for at least 5 to 10 minutes. If it works out, then that's it. Most likely, if you manage to do it, this maximum will break. Let's place it here. We're placing a line like this. Our maximum is right here. So we're waiting for the moment when the trend breaks through. This line. The candle has come very close, but we can see that a bearish candle is appearing here, so we're just waiting for the moment when this maximum is broken. The maximum has been broken, we got a profitable trade, so now we're trying to open trades for shorter durations, like 2 to 3 minutes. Because the previous maximum is broken, the price is coming out of the correction, which gives us a much better chance of getting a profitable trade this way. Alright, we've got that sorted out, so it's just a simple analysis here. We quickly looked at how the trend is moving. Because the previous maximum is broken, the price is coming out of the correction, which gives us a much better chance of getting a profitable trade this way. We quickly analyzed the trend. It wasn't flat, just a correction. If of course, there was, well, I don't know, a flat situation here, let's say, when there is a flat, and by the way, we seem to have this on the OTS pair, so let me touch on everything now. I won't go over all of this here because it's not flat. It was just a correction. Well, okay, a slight flat, because it was moving back and forth for now. But we can see that the high is being broken. And here, after breaking this high, meaning after breaking this line, we should see at least one bullish candle form. And from this bullish candle, we can easily bounce off it. But I'll say right away that it often happens when a high is broken, like this line I've drawn, which represents the maximum price it reached here. Once it breaks that, a candle forms, and then we might see a sideways movement. This happens quite often, so don't rush to open a ton of trades all at once. Just open 1 or 2 trades carefully, and that's it. Because after we see that sideways movement, it might reverse from the bottom and give a sharp impulse. This happens quite often, so don't rush to open a ton of trades all at once. Just open 1 or 2 trades carefully, and that's it. Because after we have built a sideways trend, it may already reverse itself from below and give a sharp impulse. It often happens that it builds a range, drops below that line of our maximum, and then goes back up. So in these situations, please open way fewer trades and keep an eye on the trend. But if you don't have any sideways movements or pullbacks, for example with the candles, then you should try to open positions clearly in the upward direction. But you also shouldn't open a bunch of trades. We opened 2-3 trades there. That's enough for us. Just keep an eye on the trend after that. Alright, we've got that sorted out, so let's move on to the OTS pair now. I'll just say right away that what I just explained is just one of the moments that can happen in a trend. There can be other situations too, like here, where we had a sharp impulse. The price corrected itself here, and you can see it found its minimum and bounced off of it. So we have a V-shaped formation here. As we can see, the price stopped here, gave a sharp impulse down, held its minimum, and then sharply moved up, also giving itself an impulse here. And so we have, well, we can say a dimple built that is a V-shape. With a V-shape we usually reach the maximum. As we see here, it has been preserved and reached it, even pierced it. So there are different situations. You just have to analyze everything and look for everything. But basically, all trends are pretty similar. Like right now, I opened out GP, a volatile pair, and we have a little dip formed here. Euro GP is the same. As we can see, there are impulses here and there. So it all depends on you, which pair you're focusing on, how you're going to approach it, how you'll do your analysis. But basically, I just showed you how to trade in a situation like this. And we have a V-shaped pattern forming. We just went deeper into it here, looked at the 5-minute, 15-minute charts, and we analyzed and discussed everything together. We also found points on the 1-minute interval, figured out where to enter, what to do, what to mark here, and that's it. This is how you can trade. Now, let's move on to the OTS pairs. I don't really trade OTS pairs. It's very rare for me to sit on them, usually only when there's nothing else to do. This is how you can trade. Now let's move on to the OTS pairs. I don't really trade OTS pairs. It's very rare for me to focus on them, usually only when there's nothing else to do. And here there's a really interesting point that will be great for you to analyze, especially if you're looking at trading pairs on the exchange. If you're just focusing on OTS pairs, that'll be cool too, because we had a flat situation here, or at least it seemed like it because I was entering trades and it was a flat situation. Actually no, I'm a bit confused here because there are some really sharp impulses. But anyway, let's break down what a flat situation is and what to do in that case. Because I thought I saw it here, but I guess I mixed up the pairs a bit, so never mind. What are we going to start with? We have a flat situation here. What is a flat situation anyway? In simple terms, a flat is when the price goes up, then sharply down, up again, sharply down, up again, sharply down, and up again. So it creates a ceiling for us, let's call it that, our maximum. For some reason, the line isn't moving. Alright, we moved it. Here's the ceiling where it stopped. Alright, we set it. Now let's set our floor. The floor will be at the bottom, of course. Let's say it will be here. Actually no, let's put it here. Because the candles, as we can see, were moving like this. What do we see here? We've created a ceiling and a floor. How do we base ourselves on that? What is that anyway? A flat situation, I'll explain again, is when the price reaches the ceiling and it can't break through and go outside, so it bounces off the ceiling down to the floor, and when it falls to the floor, it also can't break through. So what do we have forming here? The price is moving in a zigzag like this, in a wave. Yeah, sorry for pausing a bit. Got a little stuck. Basically, the ceiling and the floor. The price is moving in a wave pattern. If you lack other pairs or stocks to analyze, know this rule. Trade from ceiling to floor and vice versa. Master this. Bounce bottom to ceiling for upward trades, top to bottom for downward, and profit. Risk is floor breaking. Floor is broken, new low forming. You should base your trading in a flat market off the ceiling down to the floor and from the floor up to the ceiling. If you can do this really well, meaning you're bouncing from the bottom to the ceiling for upward trades and from the top for downward trades, you'll be making profits. But what can go wrong here is when the floor gets broken. As we can see, the floor has been broken. Here, a new low is being created. We're marking it like this. A new low is being created here. We set it like this. We also put a line just in case. If we break through the floor, then we simply wait for the moment when we build another volume candle. If it's not there, like here where we have a sideways movement, we can't base our trades on downward movements anymore because it hasn't broken out of the flat. It started to compensate and return back to the flat situation. So, it's gone back to this wave-like pattern, and that creates a situation where we can't clearly go for a downward trade because it hasn't broken out of the flat and has gone back in. Why? So, we're just trading again, as I said, from the floor to the ceiling for upward trades. Now we've opened up and we've created a sideways movement, and we're already bouncing off it for upward trades. When it comes to timing, there can be a lot of issues. I recommend avoiding timing in a flat situation, but it also depends on the interval. We've opened up, so we've created a sideways movement, and we're already bouncing off it for upward trades. Timing can be a real issue, so I recommend avoiding it in a flat market, but it also depends on the interval. Right now, I'm on the 5-minute chart, and I recommend taking trades from 3 minutes, whether it's for upward or downward movements, either way. Up to 6 minutes should be enough, most likely. From 6 minutes. We took a few trades, and we ended up in the profit. Next, there's also a moment when the ceiling or the floor gets broken, and it breaks out of the flat. If it breaks out of the flat upwards, meaning the price breaks through this ceiling, our maximum, then we try to trade upwards. We don't trade downwards, we just have more trades, and a bunch of trades going upwards because the ceiling has been broken and it's moving into an upward position from the flat. So, we start trying to trade upwards. And if the same thing happens, meaning if it breaks here, then we're trading downwards. So, that's our analysis of the flat market, the analysis of the V-shaped pattern, and specifically when the price is trying to compensate for itself. Let me show you again on the minute chart. When the price is moving down, it gives a very sharp impulse upwards, trying to compensate or reverse itself, but it doesn't succeed. That's the analysis we've done together. Therefore, everything depends on you. How you will choose here, which currency pair, which analysis, which trend. All this will depend on you, but I showed you the most frequent moments that usually happen to us during a trend. I also recommend checking out my previous videos because there are a lot of strategies related to these analyses and trends that can really help you. Many people have already told me, and I'll say it again, that these strategies work and they will keep working because they're very simple. Every day, every hour, we see these trends happening, and all these strategies can be easily applied to these analyses and situations in the market. And let me remind you again about my group. I have a VIP team that I trade with during live streams. What you see on your screens will be the same during my live streams. You'll be able to hear and see all the trades that I open. And there will also be some small training during my sessions because I need to explain why I'm opening a trade, what trend I've chosen, and what analysis I've done. And why did the candles move like this? I also break this down at times when I'm running a session. The link is in the description in the comments. Thank you all for watching this video. This was Trader Aroon. And let me remind you once again, don't forget to check out my previous videos. They're really helpful.